My name is John Pugliano. I'm the founder and money manager at Investable Wealth. I'm also the host of the Wealth Studying Podcast. So the Wealth Studying Podcast, we just celebrated our 10th anniversary. So any of you guys listen to it, I appreciate you being there and listening to the show. Tonight I want to talk about where to invest, and I'm going to do this in the guise of the political system right now. You know, it's an election year, and everybody's really interested about who's going to run or who's actually going to be a candidate at this point, right? We don't even know, and how that's going to affect the stock market. My take on this is going to be a little different than you probably have heard other places, and I'm just going to broadly talk about what I think is going on with the global economy, how we got to where we're at, and what that might mean for long-term trends. There's going to be almost nothing about Don Biden or Joe Trump, okay? So, as far as the elections, I know we're all obsessed in the U.S. with local elections, but this year there's 26 elections going on throughout the world. I figure there's about 180 countries, and a lot of those places don't even have elections. So 26 is a pretty big number. 4 of those are in the G7 nations, and the G7, as you probably know, that's really, you can think about that as the Western world, right? The allies that fought World War II, or in the case of Germany and Japan, the countries that lost World War II that were brought into the kind of the Western economic system, and their economies were grown and nurtured so that we could avoid another world war. So the G7 nations are really a powerful group of countries. Over the years, they've added the European Union to it. So you still have the G7, and then you have the other 24 or so members of the European Union that have a voice in the G7. They recently just had a meeting, and there's a lot of discontent, especially in Europe. We saw that with the elections, and if you listen to the media, they talk about Europe's moving to the right, and the media loves drama, right? So they always talk about the far right. The far right's taken over in France, the far right's taken over in Germany. And to some degree, that's true. The European countries are tending to move towards the right, but I would make the argument that that's not really the case, because we can look at Great Britain also just had an election, and their conservative party, the Tories, what we would consider more like the Republicans, they've been in power for 14 years, and they lost in a landslide, right? So I don't think this is more about left and right. I think it's just more about voter discontent with the establishment. And so we're going to talk a little bit about that. As far as the G7 and the move to the right, this also just didn't start in the last year or two. I think if you go back at least to 2016, and I think in a lot of cases you could go back to the financial crisis of 2008, that we've seen the discontent, again, specifically in Europe, and then as well as what happened in the U.S. In 2016, no one thought that the Brexit was going to happen, that the UK would leave the European Union. In fact, when they called that election, it was kind of done because they thought, well, they'll lose and we can go on with this. Well, they won. So they did get to, they took about 4 years before they even could get out of the European Union because they didn't know how to do it. But that was very unexpected, and much like Trump's election in 2016 was unexpected. We kind of take it for granted now that he was the president and he was popular, but if you think back to 2016, it was Hillary Clinton's time to be president, right? She was going to be the first woman president, and it's just the way it was. That's the way a lot of the establishment thought it was going to go. But that didn't happen, and we've seen, again, over these years, in 2020, a lot of the Scandinavian countries since then have been shifting to the right. You can see that with their movement, with their prime ministers and members of their parliament. And that's really been escalated since 2020 when Ukraine invaded, when Ukraine was invaded. And, we even saw countries like Finland joining NATO. This was stuff that was kind of unheard of before. Japan has really made a big shift to the right since 2021. Although if you really look at their history, it's been about the last 10 years they've been moving in that direction. Their current guy he's considered a moderate, the prime minister, but he is a member of, and I can't say the name, it's the Nippon Kagagi or something. Anybody speak Japanese? You pronounce it better than me. But that's considered a far-right nationalist group, right? So Japan has definitely been moving to the right, and as they've moved to the right, they've really been moving towards the United States. Their policies have been very favorable to the United States. In fact, the last two presidents we had. So when Trump came into office and when Biden came into office, both of those, their first foreign dignitary visitor was the Prime Minister of Japan. So that Japan is really trying to solidify a relationship with the U.S. Italy went really to the right in 2022. Meloni, she's pictured here in the white shirt. Her party is considered fairly extreme. She had kind of been a pariah up till this year. A lot of people in the European Union were avoiding her, but then all of a sudden, as the right started to gain momentum in the European Union Parliament, she's starting to appear more and more. They're, get their photographs with her, and this is the president of the European Union standing with her. And this is something that normally didn't happen. They kind of pushed her off to the side, but she's becoming more of a power broker. And then finally, again, this year, the European Union, the right picked up a bunch of seats. In France, they didn't pick up as many as were first forecasted, but I think they still have at least 30%, which is a huge number. And really, the French election is kind of interesting because Macron, who is kind of the center left, he's lost power. He's either got problems with the far right or with the far left. So it's just a disaster for the status quo there. And these were things that weren't anticipated, at least by the mainstream, just a year or so ago. So what's happening? What's driving all this? I think it has to do more with disenchantment with the bureaucracy than it has to do with either left or right politics. Again, if you look at what happened in 2016, the major key reasons that the UK left the European Union, it was because people were fed up with a stagnant economy, they had a declining standard of living, and they thought there was excess immigration, a lot of excess immigration going on. Those were the key issues, and a lot of the blue-collar type voters from the northern part of England voted for Brexit. No one thought they would. A lot of people came out of the woodwork that hadn't voted before, and that's really what threw the election. If you look at what's going on this year with the European and the French elections, same thing. Those same three issues are pretty much what people are fed up with. The standard of living is declining. They think they have a stagnant economy. Since Ukraine, energy prices in Europe and especially places like Germany have really skyrocketed. So that's aggravated a lot of people. And again, even in the UK where you had the Conservatives kicked out and the Labour Party brought in, they're not the typical leftist type platform that you would expect, right? They didn't run on an ultra left thing. Of course, they're campaigning on more free health care and free lunches, free breakfast for kids at school, that kind of stuff. But if you really look at their platform, it comes down to they're talking about stricter spending limits, which means less government waste, partnershiping with business, and rather than raising taxes to pay for their programs, they want to grow GDP. Right? This is like Ronald Reagan Republican kind of stuff. So it's interesting to see that coming out of the left in Europe. And I think the big reason you are seeing these political shifts is because the overall the G7 nations are in decline. They've been in decline for a long time. Right now, the G7 nations comprise about 26% of the global GDP. Well, you go back just 25 years ago, and they comprised 40%. You go back to the late 1980s, and they were 70% of global GDP. So if someone's in their, say, 50s or 60s, they've literally seen their whole working career in decline rather than in growth. And again, I think a lot of the frustration, it's not a movement to the left or a movement to the right. It's simply that people are fed up with the status quo, and they want a better quality of life. They want better economic conditions. And a lot of this comes down to the fact that China is eating everybody's lunch, right? That's the essence of it. All that, we talk about developing markets and emerging markets and global economy, but if you look at the numbers and you really dig down and look at the data, you'll see that, especially when it comes to global manufacturing, it's all gone to China over the last 30 years. Back in the mid-1990s, China represented about 5% or less of global manufacturing. At the peak of the pandemic, they were about 35%. And since the pandemic, they've moved back a little bit because other countries didn't want to deal with disrupted supply chains and things like that, so they've onshored and nearshored their supplies. So some of that's coming out of China. But a great deal of the global wealth has gone to China. And you can see you probably can't see it in the back, but that yellow or gold chart bar at the top, that's the U.S. So we've lost the most in overall percentages, but Japan's right below that, and on an actual percentage basis, they've lost more. Europeans don't look like they've lost as much in that particular chart, but since the pandemic, they've actually lost quite a bit more because they've not only lost what the business that they had to the Germans, or they not only lost what business they had to the Chinese, but they were selling the Chinese a high precision equipment to make the other products. And since things have slowed down in China, they've, like the Germans, have also lost that export. So it has disproportionately hit Germany over the last few years since the pandemic is over. But again, if you look at this chart here on the right, China's in red, and you can see all the other, the blue is all the other large countries in the G7. They've literally lost all that share to the Chinese. This is U.S. dollar value of manufactured products for global trade. And actually not even necessarily manufactured products, because some of it would include some services. But U.S. dollar priced percent of GDP in manufacturing. So the narrative then is that China is on the ascent, right? They're on the rise. They are going to basically displace the United States because our time has come and gone. And just like the U.S. replaced Great Britain after World War II, the Chinese are going to displace the U.S. as a superpower. That's pretty much the narrative. I don't agree with that, because when I look at the data, I see something completely different. I don't think China is on the rise or on the ascent. I think China is actually destroying global wealth. Okay? And the reason I say that is that they're not getting rich in what they're doing. They are taking wealth away from, say, Europe, but at the same time, they're not building it at home. So it's a destruction of wealth as opposed to a development of wealth. And you've probably heard about the Chinese property collapse. The real estate has been in major problems ever since the pandemic. This is a chart going back the last 10 years, and this is actually 2023 numbers, so it's worse in 2024. But going back 10 years, their property values are less than they were 10 years ago. And if you factor in inflation, you can see how that would be even more of a problem. So they're losing in just core property value, very symbolic of what happened to the Japanese back in 1990, 1991. If you look at the Chinese stock market, it's the same way. It's lost value over the last 10 years. This is representative of the largest publicly traded companies in China, so you can kind of make it equivalent to our S&P 500. And again, going back 10 years, you can see the value, and this is in US dollars, so the value of the market is even less than what it was. And again, if you factor in inflation, it's even worse than that, right? So they're just not even keeping up with inflation. And all these companies are the manufacturing powerhouses of the globe, and yet their values are not going up, they're going down. And what really worries me from a global perspective is Chinese currency has been in decline. And this is, again, priced in US dollars, so it's measuring the Chinese yuan against the US dollar. But you can see probably about a 20% decrease in value over the last 20 years. And you think about over the last 20 years how much our purchasing power is degraded, right? So now factor in, they're not only losing purchasing power, but they're losing the exchange rate as well. And I think, again, this could be very similar to in the 1990s. We didn't see Japan with a currency crisis, but we saw a lot of Asian countries with a currency crisis, which then spread throughout the globe. I think this could be a major problem that could happen in the future. If they would default on their debt or not be able to reinvest, since they're making all these products, that could really disrupt things. And then finally, too, obviously, if the real estate's down, if the manufacturing is down, if their dollar's down, then they're going to be having declining GDP growth, and we're seeing the same thing here. You really can't believe the numbers coming out of China. They're talking about having a 5% growth rate. That may or may not be true, but when you consider that over the last 20 years they've averaged in the double digits, now they're barely getting about 5%. There's just major problems in China. So I don't see them as a rising power and someone that's developing wealth. I see them as basically a pariah over the global economy, and they're destroying wealth. And then finally, the real big problem, and if you watch Chinese policies and politics, you hear them talking about the Belt and Road Initiative, where they're expanding into Africa or other nations and building bridges or building ports and things like that, making investments in these other countries. Sort of, it's being compared to what the U.S. did with the Marshall Plan kind of after World War II and how we rebuilt Europe. But again, when I look at the numbers, I don't see that happening. I see China as in this decline, and they know they have to invest outside of their country because with all the other declines, they have a huge decline in population growth, and so they just don't have a domestic market to buy their own products, and they have to make these investments outside of their country. And to make matters worse, the G7 is specifically now engineering China's decline. For the last 30 years, the G7 actually promoted growth with China. We promoted growth because we thought it would encourage peace. We promoted growth because it helped corporate profits because we could make things there cheaper and sell them in the West at a higher price. That's not the case, though. And the European Union especially has just put 100% tariffs on, and I think the U.S. too has put 100% tariffs on electric vehicles. Trump started raising tariffs 8 years ago. The Biden presidency has done the same thing. We're seeing more and more subsidies both for national defense as well as just to spur the economy within domestic industries. And again, that's the same. It's happened in the U.S. It's happened in the other G7 nations. We're sanctioning technologies where China can't use certain technologies ostensibly for military purposes, but it's still keeping the flow of high-tech products and high-tech information going to them. So even with all the incentives that China has had to grow, and they're not really growing their wealth, now we're going to see roadblocks and hindrances put up. So I think it's really going to escalate the problem with China's overall economy. So my first slide started with this, right? Where to invest. If the global economy is going to be in a problem, where do you put your money? And just from a big picture perspective, and we can have a question and answer period, and I'll be happy to talk to people offline as well. We can talk about specifics, but I see North America, greater North America, basically from Alaska up in the Arctic all the way down to Central America with the Panama Canal. This is the best real estate in the history of the world, right? It always has been and always will be. And I don't say that just as some kind of patriotic thing. It's just real estate that is more abundant and plentiful than any other place in the world. No other continent has the river system moving north and south the way we do with two oceans on either side. And so we just have access to, if there's a recession in Europe, we can export through the Pacific. If there's a problem in Asia, we can export through the Atlantic. We can go through the Panama Canal. We have all the resources, if you look at our trading partners in terms of oil and other natural resources that we get, whatever we don't produce here, we get them from Canada or Mexico. It's just an abundant country that, regardless of our political system, whether it's Joe Trump or Don Biden that gets elected, it's not going to matter. We have the geography that is going to dominate, I think, for the next 100 years. I think our decline has been greatly exaggerated. And so when it comes to investing, I'm not opposed to looking outside the U.S. I've been hearing all my life about emerging markets and all these other things are growing. I think the best emerging market is the Midwest of the United States, right? It's where the most food is grown. Again, it has the best river system in the world. We have, over the last 30 years, the manufacturing jobs and the things that we've lost all left, not because we didn't have a market for it or not because we couldn't make the products. It's just we couldn't compete on price. And with China's declining population, they no longer compete on cheap labor, right? It's expensive to make things there. We have supply disruptions. Energy costs are very expensive to move things back and forth. We've had all the shipping and problems, with shipping, whether it was the Panama Canal was shut down for portions over the last couple of years. There's Houthi rebel problems in the Red Sea. I mean, there's just all these global shipping problems. Why not just make the products in the U.S. with automation? And that's where I think things are going to go for the next 10 to 20 years. So when it comes to investing, definitely technology in the U.S. Technology is always a growth prospect because that's where the innovation is coming from by definition, right? And the whole thing with technology is that it reduces variable cost. So it's always going to be cheaper to produce a Kindle book than to print one, right? So if you think of technology in that way, technology is always where we want to have our money, but the infrastructure build in the U.S., the manufacturing plants that are coming back, the mining, minerals, everything, even old traditional things like utilities and railroads, I think that's where the investment opportunities are. So a little bit of a contrarian view on things, I think different than most pitches you'd hear from financial advisors and people picking stocks, but my money's staying in the U.S.